By now, just about everyone has heard about Twitter's initial public stock offering later this week. But Twitter's not alone. 15 other companies are currently having their IPOs this week, the most for any week since 2006. Among the companies going public this week, Barracuda Networks, which provides internet security and storage, and the web developer Wix.com.
Just 2 more days until Twitter goes public, and in regulatory filings for its IPO, the microblogging company, which has yet to turn a profit, laid out more than 30 pages of risks that business faces. So if you're thinking of investing, just how risky is Twitter for your money? Kayla Tausche has that story.
No risk, no reward. An old adage being uttered again as microblog Twitter goes public. Main Street's buzzing about it. Wall Street is clamoring for it. Despite warnings from the company, risks could lay ahead. From common to quirky, those warnings a whopping 32 pages in company filings. The gravest risk, growing pains. Twitter needs to make more money from more users, especially outside the U.S. Expansion has been costly, dwarfing revenue. The company's warned it may never be profitable. Twitter's adding users at a slower pace and could have a hard time getting them to interact with ad content. More than half of Twitter users don't do that, a recent poll showed. Newer users could be put off by advertising, which makes up nearly all of Twitter's earnings. Not to mention competition for ad dollars is fierce. Facebook, Yelp, LinkedIn, all fighting for lucrative deals. Critics say it could be an uphill climb for Twitter, whose business model is yet unproven.
They're going to have to make some very significant changes to their features in order to be profitable, and we don't really know yet how the community around Twitter is going to respond to that.
Old tech's bringing a fight over intellectual property. IBM sued over 3 patents, and lawsuits add up as users tweet out copyrighted content.
Some risks are less straightforward. Bad internet service could kick users off. Its ranking in Apple's App Store could mean fewer mobile downloads. And the perception of how Twitter measures its success could cause concern. In other words, are the company's timeline views the eyeballs from the high-flying early aughts?
Stefan Paterno, former CEO of One.com Casualty, says times have changed.
The focus is more on individual companies that have really stood the test of time, are generating major revenues, have massive multi-hundred million user bases, and I think that changes things.
Wall Street, meanwhile, has high expectations. There are more orders than shares to go around. Twitter may price above an increased price range, raising $2 billion and valued at more than $17 billion. Analysts say the stock could still soar, a high prize for a high risk. For Nightly Business Report, I'm Kayla Tausche.